The E-mini is opening up around unchanged. We had a gap up yesterday, a bear channel, and a late bull breakout. And the bulls are hoping that the bear channel was simply a bull flag. Now we have 3 pushes up, 1, 2, 3, and we have a whole bunch of targets on the chart with 3 days left of the month. And this is the monthly chart. And at the moment, we have a 3rd consecutive bull body, a smaller body, but a bull body. And on the 5-minute chart, the open of the month is this green line. We tested below it yesterday and reversed up strongly. The bears would like the month to have a bear body. If the bears do get a bear body when the month closes on Friday, that will increase the chance that April will trade below the March low, which is about 100 points below where we are. And right now, I think that is probably what's going to happen, that we're going to trade below the March low at some point in April. So expecting a 100-point sell-off. And the question is there anything you can do about it now? I think we're in the buy zone for put buyers. 60-minute chart, might get one more push up, 1, 2, 3 to a wedge, lower high, major trend reversal. Very strong bull trend, 60-minute chart. We may get one more push up to a large wedge top. I think we're probably not. I think we're going to get a lower high major trend reversal instead of a higher high major trend reversal. But we may go above yesterday's high and then get a wedge bear flag, 1, 2, 3. This sell-off was so strong. Plus, we got the issues of the weekly chart and the monthly chart. Those both make it more likely that we've seen the high. Monthly chart, we'll probably have a doji bar. We might have a bear body, and we'll probably get a pullback next month. We have a big bull bar, medium bull bar, and then either no bull bar or a very small bull bar this month. So the rally's losing momentum. And weekly chart, 10 bars in a bull market channel, bulls buy the first pullback. Typically, you get a resumption of the bull trend for a few bars and then a deeper pullback. So you expect a deeper pullback. And then last week, we have a good sell signal bar. Right now, this week is a high one bull flag, a pullback and a bull trend. But we have 3 trading days left. Let's see what the bar looks like on Friday. Let's see it make a close below the open and have a bear body. And because of that, I have the open of the week here as well, because that will be a magnet at the end of the week. Good bar for the bulls. We're back above the October high. We have a triple top on the daily chart. Here's the October high. And we've been paying a lot of attention to that price. We've been paying a lot of attention to that price for 16 months now. And why did the market pick 28.25 as the price? I don't know. But for whatever reason, around 28.25, the market used it as really important. Resistance, support, support, resistance, resistance, resistance. And broke above it, pulled back below it. And now we're right at it, deciding, is it going to be resistance and will we turn down again, which is what I think, or will we break strongly above last week's high and go up to a new all-time high, which I think we will not get at least until the second half of the year. So what do? We got a bull bar and we have a bull trend, so we're always in long. But the bar is big, so the risk is big. That is not good for the bulls. And we may get a double top lower high major trend reversal on the 60-minute chart. I think there'll be sellers around yesterday's high for either a double top lower high. So we have a possible early bear trend, double top bear flag, double top lower high, and more down. Or we can go up a little bit above yesterday's high and get a wedge, 1, 2, 3. So this is not a particularly good buy. We're in a sell zone on a 60-minute chart, and I think the daily and weekly charts also have good reasons for traders to expect a reversal. Big tail on top. So traders sold into the close of the bar. If they buy into the close, then they expect the bar to go higher, but instead they took profits. Daily chart, we had pretty impressive buy climax last week, and it followed an 8-bar microchannel, a bigger buy climax, and it's taking place on when the weekly chart, this is the daily chart, but the weekly chart has a 10-bar bull microchannel on buy climax. So we have a 1-day buy climax, an 8-day buy climax, and a 2-month buy climax, 10-week buy climax. So nested buy climaxes that further increases the chances of a couple legs down. A couple legs down, I'm not talking about 2 or 3 bars. I'm talking 10 bars, 15 bars pullback, and then 10 or 20 bars. So at least below the March low. Remember, if the monthly chart has a bear body, we'll probably trade below the March low, and we may come down to these lows around 2,600 over the next couple of months. Buy the close, sell the close. We're always in a long, and it's a big bull body, but big tail on top. It looks like we're trying to test the Globex high. So it looks like we'll probably go higher, but a lot of times it'll get near the Globex high and then reverse. So you cannot look at this and say, oh yeah, we're definitely going above that red line. Globex range reasonably big, so it's possible that we do not break out of the Globex range. 90% of the time we do, but when the range is big, the percentage might be less, maybe 80%. For the bears, a wedge. 1, 2, 3. A lower high double top with yesterday's high. 60-minute chart, the bears want a double top, lower high, break below the neckline, measure move down. That would trigger a sell below this, and possibly measure move based upon that. Takes us down here. March low, if we break below that, then possibly a measure move down to 2,600. Possible high of the day. If it closes near its low, it's a credible short. It's again testing that October resistance. It's really interesting to have this many important prices on the chart. Important over the next several days. But we got 5 important prices. So swing short below a bear bar closing on its low. For a wedge and a lower high and a test of resistance. The stop is far above, so this is not a good setup for most traders. They cannot be risking that much money on the first trade. Can you buy above 2? I would not. Bars are big, probability not all that high yet, so better to wait. Big tail, top and bottom, limit order start. Probably buyers not far below, sellers not far above. I may end up buying puts today, especially if we get up around yesterday's high. Bear body, possible wedge. You may get some bear scalpers selling the close of 2, betting that we're not going to go above 2 without at least testing down. You see the low of 3, exactly 4 ticks below the close of 2. That tells you that a lot of the bears sold the close of 2 and they're trying to scalp for 1 point. They have limit orders to buy 4 ticks below the close of 2. The bulls know that those traders are trying to do that, so the bulls are trying to buy 4 ticks below the close of 2 as well, or 3 or 4 ticks, trying to trap the bears, and then the bear scalpers have to buy back their shorts, and the result can be a bull bar 3. For the bulls, high 1, if it closes near its high, it's certainly a credible swing buy. It might be high enough probability for a scalp, but the problem with the scalpers is the size of the bars. It's hard to scalp for 1 point when the bars are this big because the risk is too big. You have to win 80 or 90% of the time. So they either scalp for 2 points or they wait for smaller bars. Bears trying to get a bear bar closing near its low. That would be a higher probability sell signal bar. This is the end of the first 15-minute bar, bar 3. And the bears would like the bar to close on its low. That would create a sell signal bar on the 15-minute chart. Bars are still big. I think most traders are better off waiting because the bars are big and because we have a lot of pretty good bull bars in this rally. A lot of traders are hesitating on selling. Also, for those same reasons, there will be traders looking to buy, trying to prevent 3 bear bars. 15-minute bar has a bull body, but 4 bars without a bear body, only 1 bear bar in the past 8 bars. Do you really want to sell that? That does not look like a good sell on the 15-minute chart. Bulls trying to create a high 1, a pullback and a bull trend. They want to get back above the October high, and they also want to get up to the Globex high. And bears are hoping that this is a wedge and the high of the day. I think it's not clear yet. The bulls have momentum, a lot of big bull bars. They have a magnet of the Globex high above. They have a magnet of yesterday's high. And the bears have a couple bear bars. I think the bull case is still stronger, so still always in long. Not great trading if you have a small account. Momentum up is good, but is it good enough to be paying above an average price? We're above the moving average. Not great. And for the bears, if they're selling, they probably need a pretty wide stop. 5 points maybe above yesterday's high and scale in higher. So I think wait for a second buy signal, wait for a second sell signal. We do not have a buy signal yet. Bar 4 is the first potential buy signal. Bears have a sell signal below 2, below 3, but a lot of traders will want a second sell signal. Or if we get 3 consecutive bear bodies, especially if bar 4 closes near its low, you'll get bears more confident and they might start to sell closes. Minimum target, the moving average. We're right at the low of the day. 3 consecutive bear bars increases the chances, well, assuming it's a bear bar closing near its low, that would increase the chances that we're going to get down to the moving average. Right now we're testing yesterday's close. Yesterday was a doji day on the daily chart and it closed near its middle. Pretty good size range. So it increases the chances today could be an inside day and not get above yesterday's high and not get below yesterday's low. 3 bear bars, maybe always in short, but I think better to wait for higher probability setups. For the bulls, a high 1, a pullback, and a bull trend. But 3 bear bars lowers the probability and reasonably far above the moving average. That is not far above average buying, it's 3 bear bars, and therefore not a very strong buy. Better to wait. Not enough traders willing to buy above a third bear bar, so you can see limit order bears sold above 4. Micro double top, but bull doji still above the moving average. Not a very high probability sell setup. It's still on the sell below 3, but probably buyers around the moving average. The bulls will try to get a wedge. Three bounces, 1, 2, 3. So they need a bull bar on 6 or 7. Bear reversal bar. You can see it's not, even though it's a sell below 3, you'd have to hold through a test of the 1 high, so not ideal. Surprise down, a big bar, increases the chances of at least a small second leg down. For the bulls, it's a test of the 60-minute moving average and the breakout point, 68 high from yesterday, and a 50% pullback. And the bulls will try to get a high 2 or a wedge. 3 reversal attempts up, 1, 2, and then they'll try to get 3. Tested the Globex high, reversing down. Bears want to get down to the Globex low. Is it sell to close? I think it's really not all that good. This is, I think, trading range trading. Lots of big bars in the middle of yesterday's range. Does it still qualify as a wedge? We went up on 1, up on 5, trying to go up on 7. We're getting a lot of bear bars. However, if the bulls get a bull bar with a pretty good body, 4 or 5 tick body, especially if it closes on its high, it would be a credible buy for a possible low of the day. I do think we're going to have a hard time getting very far from the open of the month for the rest of the week. I think the month is deciding whether it's going to have a bull body or a bear body. So what do you do with bar 7? Certainly a swing buy if it has a bull close. If it's a big bull body, it might be okay for a scalp. And for the bears, they now have a gap below 4. But bear breakout, the bears need follow through. It could be simply a sell vacuum test of support, 60-minute moving average and 68 breakout point. Whenever I come into a day thinking, oh, I want to buy some puts, it usually means a lot of other people think the market's going down, and therefore you can get an early sell-off. I want to buy puts up here, and a lot of traders know that. A lot of traders know that it's a good area to buy puts or to sell. And whenever there's an obvious good area to sell, traders start to sell before it gets to the good area, thinking that one of 2 things will happen. One is it will not get there and it will go down and they make money, or it will get there, they can sell more, confident that it will go down and they'll make money. Tomorrow at 1:30, I'm doing a webinar on trading at the end of the day. It's a Futures IO webinar. Because I'm doing it at 1:30, I'll probably stop talking around noon to rest my voice. Will the bulls get a close on the high of the bar, creating a credible sell, excuse me, a credible buy for a possible low of the day, or not? Will the bears get a close on the low of the bar, below the 60-minute moving average, increasing the chances that we go down to yesterday's low? We tried to get above the Globex high and reverse down, and now we're testing the Globex low. Okay, clearly not a good buy, and not a strong sell. We have consecutive bear bars 6-7, but tails on the bottoms of both. To me, this looks like a lot of trading range. It looks like a trading range day. Middle of yesterday's range, a whole bunch of magnets nearby, and every bar has a conspicuous tail. So there's a lack of conviction going into the close of the bar. When you get patterns on the open, a lot of times they just don't look good enough. But on the open, that's sometimes all you get. Bulls are hoping that we get some kind of a wedge bull flag here. So first bar moving up a second time. And here we have 3 bear bars, yet traders bought above a small bull bar. Higher probability, wait for a second or third entry. Gap up, tried to go up, tried to go up, tried to go up a third time. So a type of a wedge. A little bit of a gap up, bear channel, and it was turned out to be a wedge high or low, so wedge bull flag. Not a great buy above this bar, but now we got a bull bar closing on its high and reversing that bear bar. So this is a good location for bulls to buy, hoping that we're getting an opening reversal up. Double bottom, you call it a wedge, break up below a double bottom. Tried to go up, tried to go up, tried to go up a third time. And here, this is kind of like today. If we do go up, it'll still probably remain a trading range day. We have all of these magnets nearby. I suspect that we're going to be sideways all the way up to the final hour on Friday, and then at the end of Friday, decide whether to close above or below the open of the month. And even if the bulls get a small bull body on the monthly chart, you have to be thinking that the market might want to trade below that. There'd be a bull doji. We might want to trade below the bull doji after 3 months up. And that means the March low, 100 points below where we are now, is important. So this, what's taking place this week, the end of March, is setting up April. And I'm only talking about the bear case because I think it's more likely, despite a very strong 3-month rally. I think we're probably going to pull back for a month or two. Bears willing to sell above bar 4, 3 good bear bars, less willing to sell above 7. It's less bearish, plus we're lower down in what will probably end up as a trading range. Globex range, possible. We may stay within the Globex range. Bulls are hoping that this is a pullback from this and that we go up to the Globex high. And bears are hoping that this continues down. For the bears, 8 is a low one sell signal bar. But tails 6-7 at support, 60-minute moving average, 68 high. Bears hoping to continue down to the Globex low. Not a very good low one short. Tails 6-7 at the 60-minute moving average. Bull bar 8. So not worth shorting. And it's a high 2 with bar 4, but I think not worth buying. So better to wait. Might be limit order bars for the next few bars. It's still on the short below 3. I would not short below 2, but below 3 made sense. I would get out above a bull bar. Bears got 3 bear bars, and we're getting near the end of the hour. Bulls would like to get 3 bull bars. They're hoping the sell-off is just an opening reversal test of the 60-minute moving average, and we're forming an early low of the day. So far, the 60-minute bar is a doji bar. Not a good looking buy above 7 or 8. If 9 closes on its high, that would be better for the bulls. This is a possible low of the day. Basically 50% pullback, test of the breakout 68 high. Bar 9, a multiple of 3. So this corresponds to a 15-minute bar, and the bar is closing near its high. Here's the 15-minute chart. Does that look particularly bearish? Nope. Looks like a pullback in a bull trend. May have gone always in short on 4 or on 7, but I think bulls trying to flip it back to long. The bigger the body is, the more the bar closes on its high, the more likely we've seen the low of the day. I think the odds are against the day being a big trend day up or down. And that's true for tomorrow as well. I think we're going to have a hard time getting very far from the open of the month for the remainder of the week. Coming back to always in long, the bulls probably need one more bar. Bears are hoping that we're channeling down. Is it a swing buy or a scalp? Well, a lot of traders take it for a swing, and they may end up converting it into a scalp. Bulls hoping by the close and that we first get above the 5 high and then above the high of the day. Back to always in long. Stop for the bulls all the way down here, but traders are not going to let themselves get stopped out. They'll get out before it gets down there. Again, the bears short below 11, double top 5. Nope. We did not close the body gap down here. We did close the body gap up here. Breakout point 4, and then 9 closed above the low of above the close of 4, so there's no more gap down. So I would wait for a second sell signal, not sell below 11. By the close bulls 9, a lot of them might be scalping. They are opened with bar 1, and right now we have a bull body, but prominent tail top and bottom, and therefore we may close the hour around the open of bar 1. However, right now we're always in long, so odds are there'll be buyers below 11. I do not think we're going to get a trend day. I do think we'll get at least one swing up and one swing down. We may have already had both. The bears can make 4 points down, the bulls can make 4 points up. But I think today's going to be probably a trading range day. Although I really wanted to get up to yesterday's high, because that would be an area where I would start to look to buy puts. A sell climax high, or buy climax high, 5, and top of the sell climax, testing the high of the day, testing the October high. 4 good bull bars, always in long. For the bears, they want a double top, 1 and 12, and they're hoping it's the high of the day. But the bulls did a number of things that make it likely that there'll be buyers not far below. They prevented the bears from closing the gap with the 68 close. They closed the gap down, the body gap, for a close, pull back to the 60-minute moving average, a wedge bottom, 1, 2, and 3, and now 4 bull bars, with 2 of them being very good bars closing on their highs. So even though the bears double top 1, I would not sell below 12. If 12 closes below its midpoint, a lot of the bulls will get out just in case the bears get a double top, but I would not sell below 12. Limit order bulls buying 12 low. Their stop is all the way down here, so it's probably better not to buy the 12 low, especially if it closes below its midpoint. Instead, it's better to buy a high 1. 12 is a high 1. It's a pullback in a bull trend, but it's a bear body. So better to do nothing right here. Bulls, they can get out of longs below 12 if it has a bear body. If it has a bull body or a doji, it's a high 1 buy for a new high of the day. The end of the first hour, and a bull doji. We close a little bit above the open 60-minute chart. Small bull bar, 3 consecutive bull bars, and it's still a breakout above a bear channel and a pullback. So it still looks like we'll go at least a little bit higher. For the bears, double top 12, but 4 bull bars and a reversal up. We sold off on 6, we reversed up on 9. Probably buyers below 12. It's a low probability sell. I'd wait for a second sell signal. Credible sell, so we probably have to go below 12 to see what's there, and there probably will be buyers somewhere below 12. 7, not a good buy signal bar, so you had some bears who sold the 7 high, and they'll scale in more below a bear bar 12, hoping to get down to the 7 high. They know that in general, if you take a reasonable trade, selling the 7 high is reasonable, 80% chance you can avoid a loss. So right now, that means an 80% chance we're going to dip below that pink line. So bears have sold the 7 high. They sell more below a bear bar 12, expecting 80% chance they can avoid a loss. I personally would not take the short, but in general, when you get situations like this, 80% of the time they can avoid a loss, which means you get a pullback at least 1 tick below the average price, which is this middle pink line. For the bulls, a high 1. It's a high 1 above 12. It's a high 1 above 13. And if it closes near the high of the bar, it's a credible buy. I would prefer the buy signal to come after going 1 tick below that pink line, because if it comes now, 13, I'm going to be wondering, there's a pretty high probability we're going to get below that middle pink line, and therefore, do I really want to buy above 13? We might come all the way down to the buy entry price, the 7 high. Remember, the bears sold 7 high. They sold more higher, below a bear bar 12. 80% chance they avoid a loss. It falls below their average entry price, so they can get out with a loss on the short above 7, and then with a profit just as big on their short below 12. And we make, in general, 60% chance they get out break even on their first buy at the 7 high. I don't think those numbers are not as high as I just said after 4 bull bars, but you got to be thinking it was reasonable. It's not necessarily good, but it's justifiable for bears to sell that 7 high and sell more higher. disappointment, right? The bears were disappointed by the reversal up, bulls disappointed by the reversal down. I think still always in long, and I think whether or not we go below that middle line, we're still always in long. And I think there'll be buyers around that pink line because the bears who sold the 7 high, very disappointed by the rally. A lot of them will be delighted to be able to get out without a loss, which means a lot of them will get out at that pink line. You can see the buying, right? It gets 1 tick below the pink line and then it turns up a couple ticks. A lot of the bears are thinking, gosh, I'm so happy to be able to get out. And you also have a pullback to the moving average. We might get down to the 7 high. It's possible this is a double top in the high of the day, but it's a reversal. The bears had their chance and unable to capitalize on it. Confusing, disappointing. That tells you that it's a trading range open. You can see we're back close to the 7 high. What happens if we get a third consecutive bear bar? Are we back to always in short? Maybe, 14 is a big bar. The bears are hoping this is a double top and the high of the day. But right now, I think they have to get below 7. Okay, so the bears who sold the 7 high were able to get out break even. And if they sold more below 12, they're able to get out with a pretty decent profit. And you can see why I said bulls should get out below 12, because it was reasonable for scale and bears to sell above 7. And therefore, there was a chance that we could get down to that 7 high. For bulls to buy again, they need another bull bar. Probably a trading range open, so probably buyers around where we are. Probably the 7 high bears will be so disappointed by the size of this rally that they'll get out and look to sell higher, not down here. Back to always in short. After a big reversal like that, I think the bulls still have the advantage unless we break below 7. And even if we break below 7, it's still a trading range day. And therefore, you got to be thinking there might be more buyers than sellers below 7. I am currently flat. Looking to buy a reversal up, or if we break strongly below 7, then start to sell closes and sell below bars. Can you buy with a limit order, at the market and put a stop below 7, arguing we're at support, maybe we'll enter a triangle. I would wait for a decent buy signal bar. And for the bears, it looks like we've tried twice to get above the Globex high and failed. And therefore, I think it's likely we're going down to the Globex low. So for the bears, we're back to always in short. We're broke below the neckline of the double top. But trading range today, up big here, reverse down. Down big here, reversed up big here, reverse down. Down big here. Are we going to get a trend, or are we going to try to reverse up? It lowers the probability. Extreme tick reading, so traders are selling the market and they'll sell the first bounce, expecting that this is not the final low in price. Bulls, a wedge, 80 and 7, but I think we're going down to the Globex low. Was it reasonable for bulls to buy the 7 low? It's the neckline of a double top, so it's not great. However, we're in a trading range, and therefore it's probably okay to buy the 7 low and buy more lower. So I suspect we're going to get above the 7 low. But I also think that we're probably getting down to the Globex low as well. I had the 1 minute chart up on my computer, and I was trying to sell above the high of that bar, expecting a new low in the E-mini. It did not get above the high of that bar, and we just got the new low. Down to the Globex low. Should go at least 1 tick lower. We're exactly at the Globex low. Okay, we broke below the Globex low. Remember, the open of the month, the most important price on the chart for the next several days. Low of last week is also important because last week was a decent sell setup. We traded below last week's low. We reversed up, but at this point, I think we'll end up the week below last week's low. So I think the month and week are going to end up looking decent for the bears. Is it sell to close? I would not sell if we close around the midpoint of the bar. I would look to sell a pullback. Still above yesterday's low, and still a possible wedge bull flag. 1, 2, 3. As for buying above 16, let's say it's a bull bar. If it's a huge bull bar, then I think it's okay to buy. But if it's anything less than a very good looking bull bar, I think the bulls should wait for a second buy signal. Bulls trying to get above the breakout point, 7 low, and the screen's in a trading range. You know, up and down and up and down and up and down, right? So you have to assume traders entering with limit orders make money. So the traders who bought the 7 low and bought more lower will probably make money. So we'll probably get above the 7 low breakout point. I had another opportunity to buy puts on this rally and did not take it. I was hoping to be able to buy them up near yesterday's high. Still sell at close, but this is 5 bars into it. That lowers the probability. Remember, on the 1 minute chart, we were likely to get at least one more new low after an extreme tick reading down to the blue line, minus 700. On the daily chart, if this is the start of a bear trend, then yesterday is a pullback and it's a low on bear flag, but it's a doji bar, plus it's following a doji bar on Monday, and therefore it's not a very good sell setup, and you have to assume there'll be buyers not far below yesterday's low. Bulls trying to reverse up here above yesterday's low. Bears, I would get out above a bull bar, and even if it's a bear bar, I would get out probably 5 or 6 ticks, 7 ticks above any bar, including a bear bar. We're still above yesterday's low, and yesterday is not a very good looking sell signal bar, and it's still a possible wedge higher low. Bar 17, the market often either tries to break out around bar 18 or reverse around bar 18. But a reversal here, probably minor. So at this point, we've probably seen the high of the day. It still could be a trading range day. So in other words, this could remain the high of the day, and we could just go sideways for the rest of the day. Not a good sell to close bar, big tail, and not a particularly good buy after 6 consecutive bear bars. So the bulls are stuck I think, waiting for a second buy signal bar. They do not even have a first one yet. Bears, I'd get out above a bull bar. It's still possible that this is just a deep pullback, just like yesterday was a deep pullback. We had a gap up and a bull trend. We sold off, and it was simply a bull flag. It's possible that this is the same thing, that this is a wedge, 1, 2, 3, and a higher low. But with the 6 bear bars, I would wait for a second buy signal or for a series of bull bars, 3 or more bull bars. Testing the open of the month again. Yesterday we dipped a little bit below it, reversed up. Remember, the market often tries to reverse on bar 18, and this is currently bar 18. But with the 6 bear bars, I think it's not a very good buy setup. I would wait for a second buy signal. I would get out of shorts above any bull bar. The location is very good for the bulls. Testing yesterday's low, testing the open of the month, possible reversal up on bar 18. So the bear is a low one short below 18, but a bull bar, a sell climax at support. So I would not sell below 18, and I am not buying above 18. We had a reversal up. That should have been the low of the day, and now we've had a reversal down. So we've probably seen the high of the day. But it's a trading range, and therefore selling low is a bad idea, and buying high is a bad idea. If the bears are lucky, they'll get maybe a 2-legged rally to the moving average for another sell. And the bulls, I think they have a micro double bottom, 17, 18, but I think it's not good enough. You can see most of the bulls who bought above 18 looks like they scalped. Can you sell below 19? I don't know. We're right at a cluster of support levels. So I'm going to wait to see if we get a second reversal up, a second buy. If it closes on its low 19, it's a credible sell, but there are probably buyers not too far below. So the bears who take that sell are probably expecting only a scalp. Can you buy the 19 low? I would not. It's a sell, but it's probably not, the math is probably not good. It's a scalp, yet the bar is big, so the risk is big. And the bulls are looking to buy a second reversal up. Bulls trying to get a second buy signal bar. If they get it, it's a credible buy. It's probably a minor reversal, but it might get up to the 2 moving averages. And for the bears, you can see it's a 5-tick trap. So the bears who sold below 19 are thinking, oh my gosh, I sold the bottom of a sell climax at support. And they're buying back their shorts. What happens if we get outside up? It'll be a buy signal. What happens if 19 closes near its high? It's a buy signal. We have not broken out of the 18 bar range, and the bulls are hoping that this is just a test of the low of the day. It's pretty common for the market to go strongly one way and then reverse. So it looks like it's going to be a breakout below the 18 bar range like this. And instead, we reverse up and break above the top of the 18 bar range. Same thing here. A lot of selling. Here's bar 18. Instead of breaking below the 18 bar range, we reversed up. Big sell-off. Could not break below the 18 bar range. Instead, 18 was a buy signal bar, and we reversed up. If 20 closes on its high, it's a reasonable buy. If it does not close near its high, I would not buy. bears theoretically, I would get out above 18, and then they have to decide sell below 19 or wait for a second bear bar, like sell below 20 or below 17. Important bar. In really important location. As I said, I think the week is going to close on Friday below the low of last week. Last week is a sell signal bar. So, but there's a lot of time between now and then. Okay. My finger was on the button to buy above 20 if it closed on the high. It did not. So right now I'm flat. Still a 5-tick trap for the bears that sold below 19, and they will get out above 20, even though it's not a particularly good buy setup. It's still on the short below 19, a low one short, and we have not reversed up. We have not gone above the high of a prior bar, but I think it's not a very good short. A lot of the bears who sold below 19 are disappointed by 20, and they'll probably buy back their shorts around break even, which is around the 19 low. What about selling on a stop below 17, a breakout of the 18 bar range? In general, that's a profitable strategy. But we're right at such important support, and we're trying to hold the support. I often do sell 1 tick below the 18 bar range, but I'm not going to do it here. Remember, yesterday, daily chart, sell signal bar, but it's a bad one. So there probably are more buyers than sellers below yesterday's low. And it's in the buy zone, these 3 lines down here. So I do think we're going to get a reversal. A lot of times when you get a sell climax, you get one more leg down and then a reversal. Again, yesterday, not a good looking sell signal bar, daily chart. Bulls need a decent bull bar for a swing up. If you break below the 18 bar range like this and fail, typically the failure comes within the first 3 bars. So the bulls need a reversal here on 22. Bears hoping that this is going to be a huge bear trend day. Measured move from the double top. Right near last week's low. Last week was a sell signal bar, a good one, and there's really good context. So I think we are going down, and I think the week will end below the blue line, but we still have a lot of time between now and the end of the week, so we can still rally before then. I think really tough sell to close, climactic, second leg down and at support. So right now I'm trapped out. I have the double top measured move drawn from the lower of the 2 highs. We went below that, so we've got to be thinking maybe the market instead is using the higher of the 2 highs. It's still sell to close. I was too slow to react to sell below 21. I'm probably not going to sell below 22 simply because we're getting too many big bear bars. So too much risk of a climactic bounce. Bears, I'd get out of a bull bar. Possible low of the day, close to a measured move, testing the lowest of my 3 support levels. Yesterday is a bad sell signal bar on the daily chart, so probably buyers below yesterday's low. We are below yesterday's low. Can the bulls buy above 23, a wedge? With those 2 big bear bars, 21, 22, that lowers the probability of the bulls buying above 23. If 23 ends up as a big bull bar, 2-point tall bull bar closing on its high, that would be, I think, a reasonable buy for a possible low of the day. For the bears, it's still sell to close, but consecutive sell climaxes and then a fairly good sized tail, 22, and at support, I'm not going to take the sell. So I'm looking for a buy, and I'll look to sell a rally, but right now I'm looking for a buy. I'd like to get a better buy signal bar. I'd like to get a big bull bar. A sell climax. Let me look at ticks. Well, that's interesting. And we had a tick extreme here, but ticks are not all that low for that amount of selling. It further increases the chances of a bounce. Credible short for a low today, so okay to credible candidate for the low today. So yes, it's an okay buy. Looking for a couple legs up to the moving average and 21 high. I would get out of shorts here. And bulls, they can buy. If they want higher probability, they wait for 2 or 3 bull bars. Remember, yesterday is not a good looking sell signal bar on the daily chart. We have 2 dojis, and we're at the daily moving average. Bulls trying to reverse on 18, bears get a low one 19. Bulls trying to reverse on 21, bears trying to get a low one 20. Bulls trying to reverse on 23, bears trying to get a low one 24. I would not take the sell. I would either be long or flat. Traders wanting higher probability are waiting to see if we get 2 or 3 bull bars. Open of the week, just a little bit below. So far the week is above the open, so it still has a bull body. What do the bears do? I would be flat, and theoretically they sell again below a bear bar 24, but I would not do it. This is too climactic. And we're in a buy zone, and yesterday was a bad sell signal bar on the daily chart, so we know there probably are buyers below yesterday's low. Looks like it's trying to test everything, trying to get below the open of the week. Do I still think we'll get a reversal today? Yep. We have a consecutive set of sell climaxes at a support zone, and yesterday's not a good looking buy signal bar. However, I also think that we've begun a 2-month correction. Bulls trying again. Possible low of the day. I would get out of shorts, reasonable buy, if the bulls get a decent bull bar. If the bulls do not get a decent bull bar, they'll wait to buy. They'll wait until there is a decent bull bar, or 2 or 3 consecutive bull bars. Back to 2,800 with no credible bottom yet, but I think difficult to sell at the bottom of a sell climax because of the risk of reversal. It's crashing. Let me look at the ticks. Lowest tick reading of the day, so probably not the final low in price. Look at the volume. This is the 1-minute chart. Extremely big volume, extremely low ticks, usually not the final low in price. I just bought some calls for a day trade. Looking for a test of the sell climax high. And E-mini traders, if it's closing near its high, I would get out of shorts, and it's a credible buy. If it does not close on its high, better to wait. If you want higher probability, you wait for 2 or 3 bull bars. but the odds are we'll get a couple legs sideways to up starting pretty soon. Bears trying to prevent the bar from closing on its high. They do not want to get a big bull bar because they know bears will take profits and bulls will start to buy, and bulls will look to buy any further sell-off. So bears are trying to keep the bar from being a good-looking buy setup. Bears, I'd get out above any bull bar. And bulls, so far, not a very strong bull bar. Possible low of the day, but probably better to wait to buy above a bigger bull bar. For the bears, 26 is a bounce, a pause in a bear trend. And therefore, it's a low on sell signal bar. But I'm not shorting down here. I'm looking to buy. I want to sell a bounce. And after a sell climax, I typically wait for 2 or 3 legs up to around the moving average and then sell again. Remember, we had that low tick reading and big volume. Usually that's not the final low in price. So why is it crashing? I never care. I'll read the news at the end of the day. I've been saying that we're going to pull back for a couple months, and that's why it's crashing. The chart's telling us that we're going to go down for the next couple of months, and news is simply looking for an explanation. News reporters make their living selling news, and they believe everything that happens is related to news, and they're wrong. There are many other things out there that they don't understand that can be the reason for things happening. And on the charts, we have some technical things going on that make it likely that we're correcting. So it's not news, it's technical. Bulls trying to get a micro double bottom, parabolic wedge, and they're trying to get a credible buy signal bar. I'd get out of shorts above any bull bar, the risk of a couple legs up, and could go up pretty far. And for the bulls, if they get a very strong bull bar, they'll buy. Other bulls will wait to see if we get 2 or 3 bull bars, and then they'll look to buy, expecting a couple legs up. Every reversal begins with profit taking, and the bears have not been taking profits. Every little pause, they just sell, sell, sell. But at some point, they take profits, and once there's a general belief among the bears that a lot of people are taking profits, everybody starts to take profits, and you can end up with a fairly sharp reversal. Not a good looking low 1, low 28, and not a good looking buy. But as I said, if bulls start to take profits, this could go up pretty quickly. If bears start to take profits, I would get out above any bull bar, 28. Might be more buyers than sellers below 28, bull body. So I would stop selling and wait for at least a couple legs up before selling again. And for the bulls, they're looking to buy above a bull bar closing near its high. We went outside down, but this could end up closing near the high of the bar. We'll see. That's another sell, but I'm not selling at the bottom of a sell climax, so I'm stuck on the sidelines looking for a reversal, but I want a bull bar closing near its high. You can see the hesitation. Bears hesitant to sell, bulls starting to buy. We do not have to get a huge rally. This could remain a big bear trend day. It's just that more likely we have a bad sell signal bar on the daily chart, and we have a whole bunch of support levels. We're coming to the end of the month, coming to the end of the week. I think the market might try to get neutral. We may not come back to this high until the summer, because I think we're topping out on the daily and weekly charts, and this is a pretty strong sell-off. bulls trying to get bull bars, as many as they can. They need to start to get bull bars closing on their highs. If they do, that will encourage bears to start taking profits. They have windfall profits, and they don't want to risk giving them back. So the bears will start to take profits, and they'll look to sell again around the moving average. If it goes up, it probably will not go up violently. It probably will go up with the channel. So it'll go up 2 or 3 bars and then try to go back down, and then fail below 1, and then go up another 2 or 3 bars. So if this is the low of the day, it's probably not going to be a violent rally. Still not closing on the high of the bar, and not even closing above the high of the prior bar. But I would be out of shorts. Aggressive bulls, it's really not. You can buy it, but I'd rather be buying once we see bull bars closing on their highs. For the bears, it's still a bear flag, a low one bear flag. They bought below 28 a bull bar. They might buy below 30 a bull bar. Sometimes you get a reversal, and the first 4 or 5 bars have bull bodies, but small bull bodies and big tails, and therefore does not look very strong, yet it still can lead to a reversal. Not particularly strong rally, big gap down, doji bars, but and took 5 bars, 6 bars before the bulls started getting bars closing on their highs. But eventually they got bars closing on their highs, and they ended up with a big bull trend out of it. I doubt we're going to get a bull trend today. I think the best the bulls can get is an end of the selling. A lot of times when you get a sell climax on the open, the market stops going down and it goes sideways for several hours, which I think is probably going to happen. Are we always in long yet? We might be. If this bar closes on its high, we're probably always in long, but it's probably a minor reversal. It probably will be a bull leg in a trading range. A big bull bar here would indicate the bears are buying back their shorts, their profit taking, and it'll probably lead to at least a couple legs sideways to up. I'm trying to find my sell climax and trading range slide or slides. This is the kind of thing. Big sell-off. Bulls try to reverse, and the best they get is a trading range, and sometimes it drifts down. A lot of selling on the open, strong minor reversal, but not a bull trend. Series of sell climaxes, and this is what the rest of the day looks like. So I suspect that today will probably be this kind of a day where the bulls try to get a bull trend, but the best they get is a trading range. Sell climaxes and then sideways. So you get exhausted bears and then mostly sideways. Sell climax, trading range. Sell climax, trading range. Not too many bars down. The bulls had a better chance of a reversal there. But this is probably what we're going to get, either sideways or a little bit up and drifting down. I suspect we're going to get more up with Friday being so important, end of the week, end of the month. So do the bears sell again below 32, a low one? I would not. We got 4 bull bars, and 31 probably represents some profit taking from the bears. I would wait for a couple legs up and a low 2 before selling again. And for the bulls, it's hard. In general, when you're taking these buys, it's better to buy and take profits, buy and take profits, buy and take profits. This is a minor reversal. So, if you're swing trading, it's a minor reversal. You should not expect it to go up all that far. So it makes more sense to just buy, take profits, 2 points, 4 points, and do that instead of buy, hoping that we get a bull trend out of it. If it becomes a bull trend, it'll become clear. But right now, it's not clearly a bull trend. Right now, it looks like a minor reversal in a sell climax. What do the always and bears do? It's a low one, double top 26, but the 4 bull bars and the consecutive sell climaxes, I would not take the short. But I say that I did not take these shorts either. The market's deciding, is this going to be a climactic reversal or simply a sell climax, exhausted bears, and then a pause in the selling, which I think that's more likely. The bulls are hoping that we're going to get a climactic reversal, but the selling is just way too much. Here, 4 or 5 bars, the bulls got a reversal. The more bars that you go down, the more points that you go down, the less likely you're going to get a bull trend. The more likely any reversal is minor, and that's what today probably is. So big bull bar, got a second leg up to the moving average, and then the bears sold. Today's more of a trend from the open, bear trend, and a minor reversal. So here you have a bear bar, 32, and the bears did not sell it. The bulls bought it. So that's good for the bulls. That increases the chances that will go up to around the moving average, maybe to the 24 sell climax high. Less likely reverse all of this sell-off. Bears trying to pound it back down, trying to prevent a bear body. They're hoping that we're channeling up and getting a couple legs up. And for the bears, I did not take the short. 4 consecutive bull bars, sell climax, probably a couple legs sideways to up to the moving average. You can see how hard it is for the bulls to do anything. That's why I'm saying the best the bulls probably get is the trading range. And the market is simply deciding where the top of the range will be. Will it be at the moving average? Will it be at the sell climax high, back around the open of the month? Open of the month, I think, is really important. And I think we will get back there today or tomorrow. And then on Friday, decide whether the month will have a bull body or a bear body. 3 consecutive bear bars. But at some point, the bears have to sell again. But I would wait for a couple legs up. What happens if we just break below the low of the day? I'll miss it. I want a couple legs up before selling. Higher or low, minimum target around the moving average. A lot of bulls will take it for a swing, but it's a minor reversal. Is it a higher or low major trend reversal? No. Only 3 bars up, 3 bars down. So it's probably a leg in our trading range. If we start to go up and get big bars, then it could become major. But in general, probably minor. Maybe 30% chance it'll be the low of the day. 30% chance it'll be a major reversal. You can see it goes up a couple points and traders take profits. That's what I did. I went up 2 points. We're in the sell zone, moving average. Bears want to get a low 2, but most bears will want a bear sell signal bar. Bulls trying to get a breakout above 32 and a measured move up. So they're trying to get a close above 32, but they should not have allowed this much selling. That reduces the chances of a big reversal, makes it likely that we're in our trading range. Sell climax, exhausted bears, some profit taking 31, and then the bears looking for a couple legs up to sell again, and they have 2 legs up here. Will they sell below 35? I don't know. I'm not going to. I'm going to wait. 3 pushes up, 28, pause, 31, pause, 35. So for the bears, it's a wedge. Bear flag at the moving average. A credible sell, but it's starting to get a lot of bull bars, and the open of the month is a big magnet. We're almost a measure move down from the high of the day to the open of the month. Bulls trying hard to prevent the bears from getting a bar closing on its low. That would be a decent sell signal bar. 60-minute chart, this is bar 36, the close of the hour, and the bulls trying to get a reversal up. We have a double top, bulls trying to get a double bottom, and then have the market not collapse, and then on Friday decide what to do with the open of the month. You can see we're fighting over whether or not the 60-minute bar gets a bull body. It's the follow-through bar. We had a collapse last hour, and so far, terrible follow-through. Are we always in a long yet? I don't know. I'd like to see more from the bulls. It'd be nice to get a close above the moving average. The hour opened with bar 25 right here. So it's right around that blue line. And the bulls are trying to get bar 36, the current bar, to close above the open to get a bull body on the 60-minute chart. If 36 closes on its low, it's a reasonable short, but I still think we're in a trading range. Some limit order bears selling the moving average, but we're getting a lot of bull bars. So better, I think, for the bears to get a stop entry sell. And with this many bull bars, they probably need a strong bear bar. It's not yet by the close. We're right below the moving average. And bears have been selling below an average price for 20 bars. And they're finally getting a chance to sell at the average price, so some of the bears will take it. We got a whole bunch of magnets. When we were going down, I said we had a bunch of magnets below. Now that we're going up, we have magnets above. I think the most important price is the open of the month. It determines whether the month will have a bull or a bear body on Friday when the month closes. Reasonable buy, 23 high. So I think we'll try to get up there, whether or not we pull back first. So you have scaling bulls above the 23 high. They bought more lower, above a bull bar closing near its high, maybe above 31, maybe above 34. This is the SDS, the upside down version of the spider. And you can see wedge bull flag, 1, 2, 3 at the moving average. But 3 bear bars lowers the probability for the bulls. This is SDS, it's upside down E-mini, basically. And usually when you have that much selling, the bulls have to stop the selling and have it go sideways for a few bars before they'll buy. And the E-mini is the opposite. With this much buying, a lot of the bears will only sell if we first stop the buying and go sideways for a few bars. Bulls hoping to get a bull breakout above a wedge flag and a wedge bear flag and a measured move up back to the 60-minute moving average. We'll probably need a major trend reversal to do that. And this is probably only a minor reversal. So we'll probably have to test down here somewhere in the next hour or two. I get out of my calls. I've bought more lower, and I just get out with a tiny profit. 4 bull bars, 4 more bull bars. Probably always in the long, but also probably a minor reversal. Not a good short below 38 with this many bull bars. The bears, I think, needed to go sideways for a few bars and then sell. Always in short, 20 gap bar sell, but tail and 4 bull bars. So it's not a very high probability. Can the bulls buy the 38 low? I would not, despite 8 bull bars. First reversal up, probably minor. Sometimes you get a bear flag like this, and then you get a bull breakout above it, and a measured move up. Bear flag, bull breakout. So if we get that, then we might get a big reversal. Try to get a bear flag, bull breakout. You can call this a bear flag. You have a gap down, triangle, bear flag, bull breakout. 2 or 3 bull bars closing on their highs. Increases the chances that you get at least a couple legs up. Right now, we'll probably test down to around the 34 low, the first pullback. Can you buy on a stop above 39? I think the math is tricky here for stop entry traders. The bulls want a failed breakout, a failed low too short, but 39 would be a third push up, and then the bears could argue wedge, 1 pullback, 2 pullback, 3. In addition, this is still probably a minor reversal, even though it's a pretty good minor reversal, it's still probably a minor reversal. Bulls want to get back to the open of the month and the top of the sell climax, 24 high. Not many traders willing to sell below 38, but a lot of the bulls will hesitate buying above 39 because of a possible wedge. If we got 2 big bull bars here closing on their highs, then traders will think we're successfully breaking above a bear flag. You know, need to get a couple of closes above it with a couple of good bull bars, and that could lead to a trend up. Not likely. More likely, there'll be sellers not far above. At a minimum, we're trying to get to the 23 high, a reasonable buy setup. You can see the wedge bears starting to sell here. So I said I would not sell below 38. If 40 closes on its low and closes at or below the moving average, that would be a reasonable sell, trying to get down to the 34 low. Remember, we have a double top, a lower high double top, and it's as low as the neckline, and the bulls are trying to get back above that neckline as well. We're probably in a trading range, just like the sell-off was probably going to get a reversal, and the market was looking for a bottom. Here, we have a wedge bear flag, but not a good sell signal bar 40. It's still probably a bull leg in what will end up as a trading range. Getting near 10 o'clock, trying to get smaller bodies sideways. A lot of times the market enters a limit order market around 10 o'clock, 10:30 until 11 o'clock, 11:30. right now, maybe 30% chance of a big breakout and measured move up, 70% chance this is a bull leg in a trading range. Will the bulls get a bull breakout above the wedge? Probably not. We're getting close to the targets above the 23 high and the open of the month. But you can see it's becoming a limit order market. Traders buying below 38, 40, selling above 40, selling above 38. Are we always in long? Yeah, but it's a minor reversal. So it's probably a bull leg in a trading range, unless we get this 30% chance we get that, 70% chance we do not. Bears trying to get a credible sell signal bar. Tight trading range, so lowers the probability. However, only 30% chance we're going to break strongly to the upside. If we do sell off, there probably will be buyers not far below. Target for a sell-off down around the 34 low, which should also be a 50% correction. You can see trading range price action. Instead of giving us a nice little IOI bear inside bar to sell, they're creating a bigger bear bar, closing below the tight trading range. So that lowers the probability for the bears. I'd get out of longs below 42. I think it's a weaker sell. What do the bulls do? Will they buy above 43? I would not. This is a tight trading range, 7-bar tight trading range, probably a limit order market. Since it's probably a bull leg in a trading range and we're fairly late into the bull leg, traders will start to look to sell above the top of the range. You can see they sold above 38, they sold above 40. At some point, they'll sell above a bull flag. 43 is a high one bull flag, a pullback and a bull trend. If it's a bear bar, you'll probably get limit order bears selling above. If it's a bull bar, will the bulls buy? Double bottom 39 on bottom of a tight trading range? I would not. Good enough to get out of longs, but shorting, you're shorting only if you're swing trading, looking for a test of the 34 low. You'll probably be disappointed, and a lot of the bears will end up scalping. Remember, between 10 o'clock and 11:30, if a day has had some pretty strong trends before that, the market often enters a tight trading range and a lot of limit order trading. If we get 2 bear bars, is that enough to reverse it back to always in short? Only if 43 is a big bear bar. Otherwise, the bears will probably need 3 bear bars. With the bears needing 3 bear bars, will bulls buy the close? I'm not doing that, but some bulls will buy the close betting that we will not get a 3rd bear bar. Well, we have 2 decent bear bars closing near their lows. A 20 gap bar sell. The biggest problem that the bears have is the bull channel is tight, and the first reversal down typically is minor. And minor could be a couple bars, could be all the way down to the 34 low. We don't know yet. Can you buy above 44 if it's a bull bar closing on its high? I would not. It's probably a limit order market with sellers above 43. This is a tight channel. You can see that on this chart. If you go to a higher time frame chart, a tight channel is usually a breakout. 10-minute chart, So 10-minute chart, it's a 6-bar bull micro channel. So do you think it's a credible short below that bear bar? Probably not. After 6 bull bars, even in a sell climax, most bears will want a second sell signal. So that means we probably have to go higher before we can go lower. And so that means the same is true in the 5-minute chart. So very good for the bulls, right? Something's going on. Some news item came out. Bulls trying to get a bull breakout above a wedge bear flag. Surprise bar up. So we'll probably get at least a couple legs up. Traders are buying at the market. How far up can we go? Well, bulls might get a measure move up, but I think we'll have a hard time going above the 60-minute moving average, maybe to the top of the sell climax. For the bears, 2 legs up, 1 pullback, 2. Possible second leg trap. 46 is important. If it's a bear bar closing on its low, it could be a second leg trap and a sell setup. Sometimes you get a very strong surprise breakout and it just stops. And you get a reversal down, second leg trap. Bear trend, bear flag, bull breakout. If you get a bear bar, especially a bear bar closing on its low, it's a credible short betting on a failed breakout. Bear bar closing on its low. Bear bar closing on its low. Here we got dojis, not a great short. Back to the open of the month. Remember I said I thought we'd get back there either today or tomorrow, and that we'll probably stay around there for the rest of the week. And then on Friday decide whether the monthly chart has a bull or a bear body. So bulls will get out of longs below 46. If it's a bear bar, if it closes on its low, you'll probably get some bears selling. Is it enough of a surprise to make a second leg up likely? Well, it might be. It's the best looking bull bar of the day. So it reduces the probability for the bears. Right now, more likely than not, we'll get at least a small second leg up. That probability will drop if 46 closes on its low. Bulls will get out and bears will sell. Not good enough for me to short. 2 ways to draw the measure move. Well, 2 obvious ways. Breakout above a wedge bear flag. And then we have a double bottom here and takes us up to around the 60-minute moving average and the top of the sell climax, which is a logical magnet. And try moving these lines around, hoping TradeStation forgets about the other lines. But when I hit delete, it deleted some other line. I'll hit delete again, deleted another line, hit delete again, deleted another line, hit remove trend line. It just randomly deletes the wrong lines. Doji, then bear bar closing there is low. Bear bar closing on its low. Second leg trap, bear bar closing on its low. Couple dojis, minor reversal down. Usually when you get a second leg trap, you do not get a big trend. Second leg trap, not a big bear trend. For the bulls, a high 1, but and always in long and a possible measuring gap. I don't know that the probability is good enough for a scalp, but certainly okay for a swing up to the 60-minute moving average and the top of the sell climax. Big enough surprise bar for at least a small second leg, and 48 meets the minimum requirement. Bulls hoping that it's a measuring gap and that we go up here. Small second leg up, but not a good sell signal, so probably sideways here. The odds still favor higher prices. The bulls hope for the measuring gap, but I think we're going to have a hard time going above the 60-minute moving average. Remember, yesterday is a sell signal bar on the daily chart, and I said it was a bad sell signal bar and that there would be buyers below. This is yesterday's low, and we're back above yesterday's low. I get out of longs. The bears might go double top, but they're holding up. The follow through is not terrible. So I think if we do pull back here, it'll be a pullback, maybe to the breakout point, 41 high and moving average. And I think the odds are against a big sell-off. Bulls, I think you can get out below 49. For the bears, I don't know that the math is worth shorting. I think we're probably going to stay always in long for the rest of the day. It's pretty important that the bulls do not allow too many bars down here. It would be better if they just get 1 or 2 bars and form a double bottom 46, double bottom breakout test 41, and that would increase the probability that they're going to get up to the 60-minute moving average. High 1, but you cannot put the stop below 50. You still need to stop down here, especially between 10 o'clock and 11:30, when the market often sets up tempting setups, and then the market goes below the low of the buy signal bar, and then reverses up on a second or third buy signal. We're probably not going below the 45 low. If we do pull back more, we'll probably only go a point or so below the 41 high. So we'll probably be sideways to up for the rest of the day. And we get it all the way back to the open and have another doji day like yesterday. I think we're going to have a hard time getting above the 60-minute moving average. We're getting a second leg up from 45, but probably sellers not far above. You can call it a high 4, excuse me, a low 4. You have 2 legs up, 1 pullback 2, and then a breakout and a second leg up. So it's a sell signal if it's a decent bear bar. At a minimum, bulls get out of longs. The channel is tight, and therefore we're probably not going to sell off all that much. We may simply stay sideways here. The bears failed. They should not have allowed this much of a reversal. And when you get a big reversal like this, the odds of resumption of the bear trend go down quite a bit. Sometimes you'll get a bear trend and then a rally that lasts 2 or 3 hours, and then trend resumption down at the end of the day. But the channel up is usually not as strong as this, and therefore we're probably not going to get trend resumption down. The best the bears can probably get is a bear leg in a trading range day. Sell off, sometimes you get a rally and you still get trend resumption down. Today we're much later in the day. Sell off, rally, trend resumption down. Sell off, rally, trend resumption down. I think today is a much more dramatic day, much more climax on the downside, and a much stronger rally on the upside. So it's a sell, but it probably will end up as a minor reversal. And I do not think we're going to get down to the low. I think the best the bears can hope is to get near the 45 low. And right now, I do not think they'll do it. I think we'll probably stay around the 41 high and the 60-minute moving average, maybe a little bit below, maybe a little bit above for the rest of the day. 51, decent bull bar. So we may get one more push out, but I would get out of longs below 52. Aggressive bears can sell. Other bears will wait for the market to go sideways and get maybe a micro double top. High 1, but probably not much more up. So not a particularly good buy. Bears trying to begin a reversal down, which I think they will get. We may get one more push up. This is a consecutive tops type pattern where you have a complex top, low 1, low 2, or a wedge, And instead of reversing down, we get a breakout and then another complex top, spike, and second push, third push. I would get out of longs below any bear bar, 52. Bears obviously sold a bull bar, 53, and they'll sell below bear bars, 54, maybe below 52. Do they put their stop above 52? They probably can, but it looks like we may get one more push up to that 60-minute moving average. Buyers below around the moving average and probably around the 50 low. What we don't know is will we get back below the 41 high. The bulls are hoping that this is going to be a high 2 bull flag, 55. We're still always in long. We may get one more push up. We have an obvious magnet above. Can you buy above 55 outside up? It's actually consecutive outside bars, 54, 55. When you got consecutive outside bars late in a bull trend, it's still a buy signal, but typically the market only goes up 1 or 2, sometimes 3 bars, so probably not going much higher. The bears theoretically are still in their short below 54 or 52. They're trying to prevent the bulls from triggering the buy above 55. Even if the bulls trigger the buy, they'll still probably top out around the 60-minute moving average. You got a leg or two down. Trading range, not good for stop entries. Probably sellers around the 60-minute moving average. We have an outside buy setup 55, but probably not going a lot higher. So it'll probably turn into a scalp. Bears trying to get a bear IOI sell setup. They're still on the sell 54, but tight trading range. I think a lot of the bears will get out about 55. I think most of the bulls who took that buy will scalp. The odds are against a big bull trend here. 45 big enough for 3 pushes up. So different ways to count it: 1 or 1, 2, and 3. But probably will stall around the 60-minute moving average and the 19 top of the sell climax. You can see it went up exactly 6 ticks, and it tells you that the bulls scalped for 1 point. I scalped for 1 point, and I'm looking to sell, but I want to get a good sell signal bar. You know, we might get it on 57. I'd like it to get at least a 3 or 4 tick bear body. Back up to the Globex low. On the 15-minute chart, you can see a wedge, 1 pullback, 2 pullback, 3. I look at this as a complex, consecutive complex tops. First top, pullback, second top. Try to get a wedge, breakout, second wedge. Low 1, low 2, then breakout and second leg up. Tried to get a wedge here, broke to the upside and got an expanding triangle. Tried to get a wedge, broke out, parabolic wedge. Tried to get a wedge, broke out, another parabolic wedge. Wedge, and then second wedge. Low 2, and this is a low 4. But the bears need a decent sell signal bar, which they do not yet have. Is it buy the close? Yeah, it's right at resistance, so I'm hesitant to buy the close. This is a credible sell setup if the bears get a bar closing there slow, despite a tight bull channel. We have consecutive tops, and second one's a wedge, and we're at resistance 60-minute moving average 19, sell climax high. Tight channel, so we may go sideways first, but overall the setup makes sense. Forcing traders to sell lower than they want, so that's not great. I would get out of longs, and I was hoping that we'd get a smaller sell signal bar closing up near its high, but that's not what we have. So a lot of bears will not sell below 58. They'll wait. It's a sell, but bad risk reward. Risk is big because the bar is big, and reward probably not all that big because we'll probably have a hard time falling below the 46 low, the 41 high. So not much reward, pretty big risk. Probability is probably better than 50-50, but risk reward is not very good. So what do? Double bottom 55. I think I would not buy it. I think there probably will be sellers above. What do? You sell above a 5-tick after a 5-tick trap, tight trading range, a bull bar at the moving average. I think best choice here is wait. I think we're still on that sell below 56. Excuse me, I can't see the number. It looks like 58. I think we'll get a second leg down from the wedge, especially since it's a consecutive wedge pattern. Here the bulls have a double bottom 55 and a good bull bar, holding above the moving average, but the consecutive tops lowers the probability for the bulls, and there might be more sellers here than buyers. Best choice, flat. And I think it's 50-50 for the bulls and bears. Can you sell right here at the market and put a stop above 59? I guess it's 57, the high of the rally. That's one of those low risk, low probability trades. So you're not risking much, but whenever you do not risk much, the probability is low. If the bears are lucky, they'll get a second sell signal bar on 61. That would be a higher probability of a test down. They'll have a double top and maybe a measure move down to below the 41 high. I don't think we're going to go very far up or down. And I think we'll probably stay right around the open of the month all the way until the final hour on Friday, and then decide whether the month will have a bull or a bear body. It's amazing how many important prices the market tested today. 5 significant prices. Can the bears sell below a bull bar? It's difficult for the bears to get. It's difficult for anybody to get a good setup when the market's in a tight trading range. But you also have a tight bull channel. I still think it's on the short below 58. The bears trying to get a second sell. But it's hard because it's a tight bull channel and it's a tight trading range. And the market's probably not going to go very far up or down. So the reward is small. That's the second sell signal. The problem is math. We're in the middle of a tight trading range. It's certainly okay for a swing, hoping for a break back below the breakout point, the 41 high. Remember a wedge. The traders are expecting 2 legs sideways to down, and it's possible that 62 is 2 legs sideways, 1 pullback 2, and that the bulls get a high 2 bull flag 62 for a second buy signal bar. Tight trading range, right? The limit order market. Traders sell above things, sell more higher, buy below things, buy more lower. If you take that sell, you move your stop probably to the 62 high, just above the 62 high. You could even put it a couple ticks above the 61 low, because if the sell's good, we should go down further. Trading range, you have to assume big down, big up trading range, and therefore I think I keep saying the 41 high. I think we'll probably get below the 41 high. I do not think we'll get trend resumption down. I talked about that earlier, that sometimes you get a strong sell-off on the open and then a big rally, and you're still able to get trend resumption down. Bear trend, big rally, trend resumption down, end of the day. Big sell-off like today, big rally like today, and then trend resumption down. Same thing, big sell-off, big rally, trend resumption down. A lot of times with trend resumption, you get a sell-off and then a trading range and trend resumption down, like that. So sell-off, trading range, trend resumption down. Trading range, trend resumption down. But sometimes you get a rally, sell-off, rally, and then trend resumption down. Now, why do we stop at exactly at that price? 18 ticks below 61. Bears expecting a trading range instead of a bear trend, and therefore they take at least half off, if not all off, once they have 4 ticks profits, 4 points profit, 16 ticks. They sell 1 tick below 61. They place a limit order 16 ticks lower, so 17 ticks below 61. It has to fall 18 ticks for their limit order to get filled, which it did on the low of 63. And this bounce, in part, is from bears taking 4 points profit, betting against a bear trend, betting instead that this is probably a bear leg in a trading range, and therefore we're probably not going down to the low of the day. Are we always in short yet? Not yet, but if 63 closes on its low, then we're probably always in short. And if that were to happen, then we probably will get down to the 45 low. Right now, the spike pullback channel, we're testing the beginning of the channel at 46 low. Surprise bar down, so we'll probably get at least a small second leg down. Surprise bar up, you'd expect at least a small second leg up, maybe 48, maybe the 3 pushes, 1, 2, 3. $16,000 contracts, not all that big. Big bull bar here. 18,000 contracts, not all that big. So big bars, but not a lot of interest. The interest is around this green line, open of the month. Will March have a bull body or a bear body when the month closes on Friday? What do? Well, I think it's still in the swing short, but the bulls might buy. I would not buy both 63. For the bulls, 2 legs down, 59, 62. That's what they expected after the wedge. Also, tested the beginning of the wedge, the 46 low. So theoretically, it's a buy for a swing. I'm not taking it. I did sell below 61, and I did get out with 4 points. I'm back to flat. Trading range, you have to assume it's a trading range. Big down, big up, big confusion trading range. And trading ranges typically disappoint bulls and bears. The bulls, this rally disappointed the bears. Now what would disappoint the bulls? If we dip below the breakout point, 41 high. So I'm assuming we're going to dip below the 41 high. I'm currently flat, but if we dip below the 41 high and get a reversal, I'll probably buy. It's probably going to be just scalping for the rest of the day. The bears are hoping for trend resumption down. But I think the rally is just too many bars, too many points, and we're at a really important magnet. If we start getting bear bars closing near the lows, we could get a sell at close finish. But right now, more likely, look where we are with 20 bars, right around the open of the month. Is it buy the close? Nope. If you're buying, you have to buy low. If you're selling, you want to sell high, like below 61. You can see we're sideways, trapped between the 60-minute moving average and the 46 low. And I think we're going to get a breakout above or below before the end of the day, because we've already been sideways for 20 bars and we have another hour left. So I think we'll probably break out of the range. I do not think we're going to go far up or down, and I think there'll be sellers not far above and buyers not far below. I did not buy 63, and the reason is if I get out of a trade, a short trade in this case, I don't like to take a trade in the opposite direction for at least a bar or two. I feel like I'm not as objective as I want to be. If I'm just getting out of a short, I don't want to immediately get long. Sometimes I reverse, maybe a couple times a month, but usually not. Usually I get out, wait a bar or two, and then decide. It's only a swing short, bottom of a tight trading range. Bears are hoping it's an early channel, lower high, and then lower low. They're hoping for this, a collapse into the close. And any bear looking to sell wants 66 to close on its low, below the moving average. 3 consecutive bull bars, that lowers the probability for the bears. Here we had 3 bull bars, and the bears got a decent bar and a collapse. But the more bull bars you get, the less likely you get the collapse. I think the bears were lucky here. Actually, that's an 00 consecutive outside pattern and a bear bar. So that's an okay short. Outside bar, small outside bar. Well, they're making it tough on these shorts. 58, forcing traders to sell low. The second sell 61, a doji bar, and now here, selling fairly low in a tight trading range after 3 bull bars. I'm not going to take the short, but if it starts to go down, I'll start to sell. Bear is trying to get the trend resumption down. I keep showing this slide. This is what we might be doing. It would be better if the bears can get a bear bar closing on its low. Like that, like this, like that. The computers know that we might get trend resumption down, and the bull computers are fighting with the bear computers. Can the bears get what they need? They need to get bars closing on or near their lows, and the bulls are trying to stop that. You're selling 67 at the bottom of a tight trading range, so the probability is low, but you're trying for pretty good reward. Measure move down to the 45 low. Bulls would like to get a second buy signal, 63. And they'd like to get above the 60-minute moving average, but I do not think they will. I think either we stay sideways or we get down below the 41 high and possibly down to the 45 low. Not a good sell signal bar for the bears, but it's still a reasonable short. It's still on the short. arguably below 62, below 61, below 56. If 67 had a smaller tail, I would be selling on a stop below its low. I'm still looking to sell. Bearish trying to get the trend resumption down. And again, another bear bar, but tail on the bottom. So the bulls keep stopping the bears. The bears keep trying to get bars closing on their lows, and the bulls keep putting tails on the bottom. So it keeps it neutral, slightly more bearish than bullish. And we have a reversal down, breakout 62. But why are the bears not able to do what they need? So it's slightly more bearish below the moving average. Trading range behavior, sideways for 20 bars here in a very tight range. I'm happy to buy, but I need a pretty good bull bar. At some point, if we do not go down, the bears buy back their shorts, and that can create an upside breakout. You can call this a tight range. You can call it a triangle. 3 bottoms, 1, 2, 3. And for the bears, they're hoping it's a lower high major trend reversal and that we channel down. And neither side has taken control yet for bulls or bears. 3 bear bars, so not a good buy, even though the bottom of the tight trading range, and a bull bar and 3 bars with tails, so not a good sell below 68 or 69. Everybody's waiting for either a good signal bar or for a breakout that reverses. We're at the bottom of the tight trading range, and the bears are not doing what they need to do. We're at the end of the day. So we may get a little pop up to the 60-minute moving average if the bears buy back their shorts. But bulls want to see a bull bar closing on or near its high and at or above the moving average, and they don't want the bar to get too big. Bulls are trying to get a swing up into the close. Bears, I think, will get out of shorts here. No energy. Nobody expects the market to go very far. It's on the buy, but not a very good buy. We're in that time window when the market sometimes has a buy the close or sell the close finish. This might be a little bit early to make it to the end of the day. So if we start to get 3 or 4 consecutive bull bars, it'll be by the close. It might be by the close with the close of 71. However, typically in a trading range day or a bear trend day, this is both. If the by the close rally starts before 12:30, 12:35, it will not make it to the end of the day. So it might go up 4, 5, 6 bars, but then you'll expect at least a few bars down. A big bull trend day, buy the close could start anytime, 12:05, no problem. But if the day is mostly a trading range day and buy the close starts too early, it typically does not last. This is 11:30, too early. 11:30, too early. Similar to today, bear trend and rally. Bulls trying. Now, top half of the tight trading range and just below the moving average. It's by the close. Bulls looking for a trend resumption up. So bull trend, bull flag, trend resumption up. A lot of the bulls will have scalped 1 or 2 points, 70 high. I don't know if that's a real gap or if that is TradeStation bad data. But as soon as the bulls got that strong close, a lot of traders just bought the market. Can we get all the way back to the open? It's possible. Yesterday we closed the open. I don't think we will. I've been saying that I thought we would have a hard time breaking above the 60-minute moving average. Gaps on the 5-minute chart usually close. But again, TradeStation samples data, so that gap may not be real. They don't show every tick. They have an algorithm that plucks out some of the ticks, but not all the ticks. Some bulls take profits. Some computers will sell here, 60-minute moving average in the height of this trend, but individual traders, I would not be selling with limit orders this late in the day. Getting near the top of the sell climax high, bar 19. For the bears, you can call it tail breakout, trading range, different ways to draw an expanding triangle, 1, 2, 3, 4, 5. Everybody, well, not everybody, I was going to say everybody knows it's not going to last to the end of the day. That's not true. Probably most people don't know that. So what do? Do you sell below 74? I would not. I think if it's a bear bar, the bulls will get out. If it's a big bear bar closing near its low, you'll get some bears selling. But right now, I scalped, I'm flat, and I would need a second sell signal to sell, so I'm not going to sell here. I'm looking to see if I have examples of, gaps on the 5-minute chart. We had a gap down here, and it closed later in the day. But look at the CME chart. There is no gap. This high is at that low. Here, there is a slight gap, hard to see, but this high is below that low. But the actual data from the CME showed no gap. And that's what we'll find out in a few minutes on the 5-minute chart. I'll look at the CME chart to see if there is a gap. Typically not, but I'm assuming the gap will close, because when's the last time you can remember a gap on the 5-minute chart stayed open until the end of the day? Extremely rare. I'm going to turn the screen off for a second. I just looked at the CME website. You can see the gap on TradeStation data right here, but look at the CME website. The bars actually overlap by a tick. The low of this bar is 1 tick below the high of that bar. So the actual data, the CME owns the data, so they get to decide what the actual data is. And on the CME chart, there is no gap, even though on the TradeStation chart, there is a gap. Second sell signal, failed breakout of the 57 high. Well, 5 consecutive bull bars. I don't think it's worth it. Remember, the buy the close is not likely to last to the end of the day. It started too early, so we could pull back, but I doubt we're going to go very far up or down. That's the sell. Failed breakout, the top of the trading range. Failed breakout, 60-minute moving average. Double top 19, buy climax high, sell climax high. And it's a second sell below 75. But tight trading range up here and moving average just a little bit below. It's probably not worth it. Tight trading range this late in the day. Very difficult to make money with stop orders. That's the sell, and you can see the gap close. There is no gap. If you check the CME website, there was no gap. It's just bad data from TradeStation sampling. Let me see if I can reload the TradeStation data. No, TradeStation still has bad data. Overall, a pretty interesting day. It's the end of the month, end of the week, end of the quarter, so it's an important time of the year. And then you add to that all the things that are going on with the higher time frames. I think it's especially interesting. Weekly chart, 10 bars without a pullback. Finally get a pullback. Bulls were likely to buy it. Probably correct for 2 or 3 weeks. We went sideways for a couple of weeks. You usually get trend resumption for 2 or 3 weeks, and then a bigger correction lasting more bars, a couple legs sideways to down, maybe 10 bars, maybe, which would be about 2 months or so. So I think we've probably started a 2-month correction. The bears have a good sell signal bar. Also, the location is good. The market has stalled at 28.25 for 16 months. And daily chart, we have nested buy climaxes. This is a 1-day buy climax, 8-bar bull micro channel. So an 8-bar bull micro channel, 8-bar buy climax. And then this is the daily chart, but the weekly chart had 10 weeks without a pullback. So this is also a climax. So nested climax is small, medium, large, at resistance. So that's another reason to pull back. First target would be the March low, and I think we'll break below it. I don't know how much lower we'll go. Maybe down to the 2600 area, down to these lows. That would also be about a 50% correction. 5-minute chart. I thought yesterday was a bull flag, so rally and breakout, bear channel bull flag, and we broke above it. We had a wedge, 1, 2, 3. The bears tried to get a reversal down, but with the channel tight, typically they need a second signal, which they got here. With the 4 bull bars, it was not a high probability short. We got a better bear bar, 13, and then 3 bear bars, and then we started to collapse. We crashed down for about a measured move, parabolic wedge. I view this as type of spike in channel, so spike, pullback, and then parabolic channel, 4 pushes, 1, 2, 3, 4. We tried to get a reversal here, small bar, so small risk, and that means low probability, but an okay buy. And then surprise bar down 24, and then another big bar 25, the biggest pair of bear bars, the best looking pair of bear bars, 20 bars into a bear trend, maybe 15 bars. Well, if this is the start of the bear trend, but fairly late into a bear trend. So you're going to be thinking it might be an exhaustive move, and we're getting a series of consecutive sell climaxes, so the odds are we're going to get a reversal. So 60% chance 24.25 is an exhaustive move, but 60% chance you get one more push down before you get the reversal. And we did it. We got one more push down, 27. We have a bull outside bar 29 for the doji, tail 28, tail 30. However, I said that sometimes you get several small bars before you get the reversal up, and it's still a credible bottom. So for the bulls down there, they could buy above any of these bars, but the probability went up once we had 31 and then 34. We had a wedge bear flag here, but too many bull bars, channel too tight, probably a minor reversal. Then we had a surprise bar up 45, and that controlled the remainder of the day. We had another wedge, so we had consecutive wedges here, pull back, and then here. We got a couple legs sideways to down. You can call it a triangle. 1, 2, 3. The bulls tried to resume. We had a micro double top The buy the close rally started at 12:15, and it's a trading range day or a bear trend day. That buy the close rally is not going to make it to the end of the day, so you have to assume a reversal down. And I just got too tired to take the short below 76. For the bulls, we had that reversal up yesterday. However, today, bar one, tail on top, and it's also a wedge, 1, 2, 3. So it's a possible high of the day. Traders can either short below 2 or 3. And bar 4, the bulls want a double bottom 80, a high one bull flag, but all 4 bars, tails, and then 3 consecutive bear bars, probably sellers above 4. And for the bears, a second sell signal below 5, but a bull doji, not great. Probably support around the moving average. And we might get a third push down to a wedge bull flag, which we did. For the bulls, a wedge bull flag at the moving average. Bar 7, but a bear bar. Bar 8, better, but the bull bars so far today do not look as good as the bear bars. So this is not a very strong buy. And then we got good 9 and 10. For the bears, they got a double top 12 and 5, a lower high. Possible high of the day. The market's always looking for double tops and double bottoms, wedge tops and wedge bottoms in the first 90 minutes. And, this is a potential high. But with the 4 bull bars, I thought more likely buyers below. And then we got 13 closing on its low, 14, decent bear bar. Traders were starting to conclude that this is the high of the day. And then 15 broke below 2 moving averages and the low of the day, the neckline of the double top. And the bulls gave up. So now we're always in short on 15. Follow through 16, probably going lower. 18 could be a large wedge bull flag, 80, 7 and 18. But with 6 big bear bars, I would take a second buy signal and not that. We had another leg down, 22, and a second buy signal, 23, possible parabolic wedge with 7 and 18. Failed breakout yesterday's low. Small bar, so small risk, but low probability, but okay to buy. And we got a surprisingly big outside down, 24. So expect at least a second leg down. First leg down, 25. Pause, 26. Second leg, 27. And bulls will start to look to buy. I had 5 support and resistance levels drawn in today. We went above that one. We fell below these 3. We may fall below that one. However, I kept saying that the open of the month and last week's low are very important magnets. And this is consecutive sell climaxes. I think we're going to try to get back to the open of the month. And we got the reversal here for the bears. Double top 26, 32. But parabolic wedge, we should get a second leg up. So buyers below 32, buyers above 34. We got a spike and channel up. 1 pullback, 2 pullback, 3. Decent bear bar 44. Might test 34 low, but I think we'll get a second leg up. And then we had a surprise bar 45. Probably at least a second leg up, maybe 48. The bulls got a double top 50, double bottom 50, 47, 50. Breakout test 41 high. But not a particularly good buy signal bar. Also, I think we're going to have a hard time getting above the 60-minute moving average. Breakout 51, pretty good bar, probably a little bit more up. For the bears, it's a micro double top, 52, 54. Okay, short if you can use a wide stop, maybe 5 points above the 60-minute moving average. The bears had a wedge sell signal below 50, but 3 bull bars and a very big bear bar 50. Not 50, 58. I cannot read the numbers. But at 58, it's a sell signal bar. Tight bull channel and also a tight trading range, selling pretty low in it. A lot of the bears will want a second sell signal, which they got 61. A doji bar, not great, so reduces the chances of a big sell-off. 62, surprise bar down, so we'll probably get a second leg sideways sit down, 68. And then the bulls finally got a decent buy signal bar, 70. You can call it a double bottom, 62, or a triangle, 46, 62. Looks like we'll try to get back to the 60-minute moving average. However, the problem is it's 12:15, and it's not a strong bull trend day. It's a strong bull trend, but not a strong bull trend day. So it's still a trading range day. And if you get a buy the close rally that starts before 12:30, 12:35, it's usually not going to last. The bear's got a micro double top, 76, and then a reversal back down to the open of the month. For stop entries today, first one that I thought might be good was below 3, but you had to put a stop above 1. And then next, 8, we have a wedge, 8, 9, 10 are all stop entry buys. I'd get out of longs below 12. Bears might short, but with the 4 bull bars, we'll probably need a micro double top. Did not get one. So bears either sell below 12 or below 13, or they wait for a bear breakout 15 and then sell below 15 or 16. It's okay to get out above 18, but then you have to sell again below 19 or 21. You can get long above 23 or get out of shorts 23, but the bears trading always in, sell again below 24. I would get out above 28 and get long either above 28, 29, 30, or 31. You can get out below 42. Tough to buy above 45. It's forcing you to buy with a big stop. But we were going to get at least a small second leg up. So some bulls bought about 45, others bought about 47 or 58. You can get out below 52 or below 54, and 55 consecutive outside bars. But consecutive outside bars late in a bull trend, probably the final bull flag. So yes, the odds are you make money buying above 55, but it's probably just going to go up 1, 2, or 3 bars and stall. For the bears, it's a stop entry sell below 58, stop above 57. For the bulls, double bottom 59, 55, but we're probably going to get a second leg sideways to down, so I would not buy 59. And for the bears, a second sell below 61, but not great. And then terrible follow through 63. So the bulls are hoping 62 is a failed bear breakout, and the bulls would buy above 63 or wait for a second buy above 70. I would get out of shorts above 63, and there never was another sell in here. Bulls would buy above 70, get out of longs below 75 or 76, and the bears would sell. Buy the close, sell the close. It's probably buy the close on 9 or 10, and sell the close. Maybe 14, 3 bear bars, 15, yes, 16, 17, yes. Surprise bar 21. So it's probably sell the close 21, 22, 24, 25, 27. I would not do it. We're right above the final of the 5 lines I have drawn on the chart. We have a parabolic wedge. We have a sell climax 24, 25, and a second one 27. I think we're going to reverse. And is it buy the close 31? It might be always in long 31. It's probably always in long 36 or 37. But right at the moving average in a 20 gap bar sell. So probably not going a lot higher, 36, 37, but it is buy the close. 45, buy the close. 46, 47, probably buy the close, but bad follow through. And that's probably it for buy or sell the close. Limit order trading, high probability sell about 4, 3 bear bars after a wedge. We should get a second leg down. And beyond that, I would not sell above 18, although that made sense, 6 bear bars. That one is okay sell, but I would not sell above 23. And 26, I doubt we're going a lot lower. But would I buy it? No. 28, you could probably buy and scale in lower. 32, a bear bar, double top 26, but we'll probably get a second leg up. So it's not a great buy, but there probably are buyers below. 38, probably buyers below, but 38, probably sellers above. We're probably going to have a hard time going up a lot further without pulling back. 48, buyers below. 54, sellers above. 59, I thought we were still on the sell below 58, but not a great sell above 59. 65, probably buyers below. 75, probably sellers above. I want to buy puts, but I want to buy them higher. And typically what happens is the best looking pattern occurs on Friday. The options firms try to defer allowing great patterns to develop in the middle of the week or early in the week because they make money by selling time decay. And if they can sell you options on Friday, they get 2 days of your options losing value Saturday and Sunday. So they know you want to buy puts or calls, and they want to make the most attractive setup come on Friday, because they want most of the buying, or a lot of the buying. They want a lot of buying taking place on Friday. From always in, we're always in on the open, but to me, the first trade was sell below 3, get out above 8, and then I'd get out of, if you bought above 8 or 9, I would get out below 12. Bears would start to sell below 12, 13, or 14. I'd get out above 18, maybe, not necessarily. Sell below 19. I'd get long above 23, or get out of longs. And get out of shorts. I'd sell below 24, and I would get long above 28, 29, or 30. Get out below 42. Get back long either above 45 or 47. Get out below 52 or 53. Buy above 55, expecting a scalp, and sell below 56 or 58 or 61. I'd get out of shorts 63, get long 70, and get short below 75 or 76. Good question. The strong trends like 12 to 27. If you're selling pullbacks, are you selling above bull bars like 18, 23, and 26? Likewise, for bars 28 to 40, are you buying below bear bars 32, 38, and 40? Is that a reasonable thing to do? In general, if a trend is strong, let's say a bear trend is strong, you can sell for any reason, including above bull bars. But typically, if I think the market is probably going to have a reversal day, I don't want to be selling near the low. And so selling above 23, I would not do it. Selling above 18, I would not do it. I'd rather sell on a stop below a bear bar, 19, or on a stop below 24, even though theoretically you'd be in a position to make more money if you sold with a limit order above 20. Yes, the reward is bigger, but the probability is less. So my general rule is, if it's in a bear trend and I see bear bars closing near their lows, I like to sell below those bear bars. If it's in a bull trend and I see bull bars closing near their highs, I like to buy above those highs. If it's in a bull trend, I like to buy below bull bars. If it's in a bear trend, I like to sell above bear bars. Let me take a look at AMD. Okay, we're in a bull channel after a big sell-off, and we have a micro double top, 1, 2, 3, parabolic wedge, 1, 2, 3, and the first leg down, but reversing down from the top of a channel. Pretty good bull bars here and here. To me, it's not a very good looking sell. And would I buy? No. And part of the reason I wouldn't buy has nothing to do with AMD. It has to do with my belief that we're correcting for the next 2 months. So I'm not looking to buy anything. Maybe you buy home builders who are benefiting from the low interest rates. Kaufman Broad Homes, even on bad tape in the general market, Lennar, the home builders are doing well, but they're pretty much the only thing doing well. But AMD, and we're in a bull channel, but a lower high, 50% pullback. And if anything, I would sell for a trade below that bear bar and exit with a point or with $1 or $2 profit. So I'd be getting out of shorts, and I would not be buying yet. And you also asked about the 60-minute chart. 60-minute chart. I'll put up a 240-minute chart. 4-hour chart. It's a higher low. 2 or 3 legs down, 1 pullback, 2. strong enough down, the bulls will want a micro double bottom. I'm going to go back to the 60-minute chart. Big enough breakout. Looks like we might get more down. So, yes, a higher low, good for the bulls, but very tight bear channel. That makes me not want to buy unless I see an upside breakout or an upside breakout and follow through. Then I might buy. But right now I would not be buying. And for the bears, we've already had the reversal down, and we're still so far making a higher low. This is probably going to end up as a measuring gap. And I say that because I think the overall market is converting into a bear trend for the next couple of months. But just looking at this, very tight bear channel, I don't want to buy yet. Higher low after a pretty good rally, I don't want to be selling down here. So 60-minute chart, I would do nothing. And daily chart, limit order sells above prior highs, right? Place sell at the high, sell at more $1 or $2 higher, but not a very good stop order sell. Parabolic wedge nested within a big wedge, but I would not be selling down here. Question about options. What instruments are you trading? Buying puts in the spider or something else? Also, at the highs and lows, where do you look for choosing a particular contract? Time, premium, Greeks? This question comes up every now and then. My general rule is if I'm planning for a day trade, I'll use options that expire within the next several days. Usually, I prefer options that expire at least a week out, because sometimes I'll want to keep the position on overnight. And if anything, if your option is expiring within the next 2 or 3 days, the time decay, the theta, is really high. You could easily, on a spider option, you could easily lose 50 cents a day. So I prefer to have theta less than 20 cents. I prefer less than 10 cents. So if there's any chance of me holding the position for more than a day, in other words, overnight, I want to be trading options that are at least a week out. Most of the time, I trade options that are a month or so out. And if I'm planning on holding a position possibly for 2 or 3 weeks, which I sometimes do, I usually trade options that are 2 weeks out, 2 months out. Because if I might hold for 3 weeks, I don't want to be trading an option that expires in 4 weeks, because after two weeks, once I get into that final week, time decay starts to become a problem. And you can also see, I understand the argument, Al, why would you ever trade May when April is so much less expensive, has so much less time decay remaining? Because I'm willing to pay more because I want I want less time. The rate of time decay is less, and sometimes I'll want the option to hold on for more than a couple of weeks. So in general, if I'm thinking of overnight, if I'm thinking of possibly holding for a week or more, I tend to prefer options that expire at least 4 weeks out, even though the actual dollar cost might be more. So if you buy an at the money put, for example, that expires in 2 weeks, you may pay $3. And if you buy the same strike price that expires in 8 weeks, you might pay $4 or $5. I'd rather pay the $5 and have less decay. By the way, Larry McMillan is going to be speaking to our group, both the Brooks Price Action chat room group and the Brooks Trading Course group. I forgot the date, but Richard and Robert have information posted about it. And the question was about options. And I remember probably 30 years ago, one of the books that I read when I first started trading was his book on options as a strategic investment. And unlike the vast majority of other books, his book made sense. It was clear he was an options trader, and that he gave a lot of thought to what he was doing. And he contacted me a couple months ago and asked me if he could speak to my groups. And I said, sure, that's fine. I get approached by a lot of people for different things, and I don't trust most of the people. I only want to do stuff that I think will help the people who look at my websites. So I'm pretty selective. And I don't know Larry personally, but I know he's been around forever, and I know his book is. I haven't looked at it in 30 years, but he keeps updating it, making new revisions. And what I remember is he's a clear thinker. He seemed like an honest guy, and he knows a lot about options. So he will be speaking about options at some point in the next few weeks. Let me check my calendar and see if I can find when it is. Yeah, I have it written down that he's talking on April 11th at 2 o'clock. So if you're interested, and I think it's worth, spending 45 minutes, an hour listening to him, you can look for information about signing up for the webinar on either the Brooks Price Action chat room website or on the Brooks Trading Course site. All right. Hope everybody has a good night.